Good afternoon, good Red Friday. Red, remember everyone deployed, but more importantly than that, here at Low VA Rates, as a reminder, we try to wear red on Friday to thank the veterans, active, retired military for their service. Today, we are talking about APR. We have found through discussions and many years in this industry that one of the most misunderstood topics when it comes to getting a mortgage, or one of the most confusing topics, is APR. Now, you should know that APR stands for annual percentage rate. This is a complex topic, hence this picture over here. This is somebody's brain thinking E equals MC squared. I'm not going to give you a math lesson today, but I am going to try to take a very complex idea and simplify it. That's no easy task, but I'm going to try it for you real quick. Now, you'll notice I'm glancing down at my trusty iPhone here. I do want to read you a definition because I cannot do any better than this definition. But then what I will do is put it into real life practice here on the whiteboard. An annual percentage rate is a broader measure of the costs. We're going to get over here to cost, but it's a broader measure of the costs of borrowing money. The APR reflects not only the interest rate. We're going to talk about interest rates today. There's a difference between the interest rate and the APR, or annual percentage rate, because the APR reflects not only the rate, but also points, fees, broker fees, other charges, all of the costs involved with getting your loan. And for that reason, your APR, as you can see here, is almost always higher than your interest rate. And that confuses people. Many years ago, when I was actually acting as a loan officer, I would remember having clients that trusted me to the core. We got them all the way to the closing table. They knew we had them locked in at a great low rate. And then they would look at their truth in lending statement, and they would see this thing known as an APR. And it would kind of throw them for a loop because the APR was always higher than the interest rate. And they'd say, Eric, you're a good guy. I trust you. Why are you telling me that my rate is higher than what it was supposed to be? We educated them and calmed them down and said, well, look, we actually talked about the APR at the beginning. Maybe you didn't take the time to look at it. And that's what I'm going to do with you guys now who are watching. It's a very simple explanation. Interest rate is the rate that you see on TV, see it on the billboard, you see it on the flyers you get. And that's, hey, we're offering a 2.75 30-year fixed rate today. By the way, rates change daily, but if you call us today or anytime in the near future, we can here at Low VA Rates get you a 2.75 30-year fixed rate. However, we also have to disclose to you what the APR is. We can't hide, nor would we want to hide closing costs or fees from you. So there are a couple of documents in your loan paperwork where fees and points and charges are explained and disclosed. However, you're also welcome to look directly at the APR. Essentially, the higher the APR is, the more your closing costs are. Without even having to see what those closing costs are, just know this. The higher your APR is than your actual interest rate, the more you're paying in closing costs. So here's what I put up on the board as an example. You're a consumer, you're shopping for a loan, whether it's your fifth loan or whether it's your first loan, and you're talking to a handful of different lenders. Hopefully, Low VA Rates is one of them. And each lender gives you something different. You've got two lenders that are offering you a 2.75 30-year fixed rate. You like that. That's the very low rate. Then way over here, you've got someone that's offering you a 3.25% 30-year fixed rate. Now, you'll notice this 2.75 has an APR of 3.4. This 275 has an APR of 3.19. And this 3.25 rate has an APR of 3.31. If you were going to base your decision on nothing more than I'm going with the lowest APR because that means taking my closing costs and my interest rate and jumbling them all together, that bank is going to give me the least expensive loan. That would be true. Then you would pick this loan right here. This would be the winner. Winner, winner, chicken dinner, as they say. Based on APR alone, that's the decision you would make. Now, I'm going to end with this. One of the reasons why I feel like APR should not be the only thing you're looking at when making a decision. It's important to understand it, and I hope my explanation just helped. However, in addition to looking at your APR, you should also take into consideration something known as recoup. Okay? Hopefully this marker looks okay on the screen. Recoup. Okay? How quickly can you recoup your closing costs? Both of these banks are giving you a 2.75% rate. This guy just happens to be charging more what? More closing costs. That's why his APR is higher than this guy's APR. Okay? Even though this is a lower interest rate, over here, you've got less closing costs. So I would suggest this. Figure out how long you plan on staying in your mortgage or living in your home. We've got lots of videos on our stations that explain to you that most homeowners, specifically military homeowners, they move frequently and they refinance their loans frequently. So if you plan on being in your mortgage for a shorter period of time, you will also want to take all of your closing costs, add them up, and determine if it makes sense to pay that many closing costs or not. Those are the two things I would look at when shopping for a mortgage: APR and recoup time. We will do an entire webinar shortly on how to calculate your recoup, and we'll go through some examples. I hope that helps. This is Eric with Low VA Rates. We'll see you next time on our next Google Hangout, and hope to hear from you soon.